All right, folks, very thrilled to welcome Josh Linville to the What the Futures podcast. Josh, welcome to the show.
Hey, man, thanks for having me. I appreciate it.
When I sent you a DM on X the other day, I didn't actually think you would be like, yeah, let's do this. So I really, really appreciate it.
Hey, I got to have something to fill the day. We just had a little bit of snow come through Kansas City, so I'm sure not going outside to spend my time. I'd rather be inside doing this.
Yeah, fair enough. Yeah, we got a little bit of winter arriving here as well, but we'll take it. It's that time of year in Canada, so we'll take it. So, Josh, I want to start right off the hop here. I looked up, of course, I cheated. I used AI to look this up, but I looked up, earnings and revenue for the last quarter and for 2025 for some of these major fertilizer manufacturers. And, correct me if I'm wrong here, but they're doing okay financially. Is that a fair statement that on the manufacturing side, they're doing pretty good these days?
Yeah, I think they're going to be okay. I think they're going to be able to pay the rent and keep the lights on for another quarter. I think they're going to be, and maybe they'll be able to cover a couple salaries. Yeah, it's been a very good time, especially some of these North America-based fertilizer companies. If you're not in one of these areas that are causing some of these supply demand issues around the world, you're reaping the benefits. You are getting rewarded for having invested in these facilities when the margins were not so good.
Yeah. Are we, this is a bit of a loaded question, but are we, the chickens have come to roost here for prairie farmers. Like, it's tough going out there. It's tough going, when I look at the equipment side, what's going on with, the auction sales, what's going on at the equipment side of agriculture. It's tough going there as well. Is that coming for the fertilizer industry now? Are prices going to work lower, farmer or prices available to the farmer, hurting margins, and the chickens will come home to roost here? Or where are you at on that?
I'm a big believer. High prices eventually cure high prices.
Mm-hmm.
Eventually being a very, very key piece of that statement, though, right? It's one of those things when you look at where we're at today, and a lot of people look at it at the surface, or look at the pricing and saying, just like you said, input prices incredibly high, output grain prices incredibly low. Why am I getting pinched on both sides of the equation? And we always look out our back door. We look to our surrounding area to see what and why and where.
Yep.
Unfortunately, a lot of these things that are driving it, now every fertilizer's got its own reason, right? But a lot of these things are being driven halfway around the world. When I talk about why, nitrogen prices are high, I talk about China, I talk about Russia, I talk about Europe, we talk about phosphate, I go back to China. I mean, unfortunately, it's things halfway around the world with governments that honestly couldn't care what our opinion is on stuff. So it's unfortunately situations kind of out of our hands for the moment.
All right, fair enough. When you talk about the global factors influencing price these days, is there any changes out there? Is there anything that you look at and say, you know what, this has been this way for the last couple of years, but it's about to change, or it has started to change?
So let's start with urea. I know it's a pretty popular topic for nitrogen. Everybody likes to talk about it. One of the biggest things we've been talking about is China. They historically export somewhere around 5 to 5.5 million ton. Well, when the whole Russia-Ukraine situation happened and the world thought, hey, we're going to lose Russian exports, prices started to skyrocket. Inventory started to get tight. Supplies, you couldn't find them. And the Chinese government, being communist that it is, stepped in and said, okay, we're done. We're going to slow down exports. We're not going to allow this anymore. We're going to keep these tons at home for our own farmers and keep our price lower. And fortunately for the Chinese farmer, it worked really, really well. Unfortunately for the rest of the world, it worked really, really well. Last year, it came to a head, 2024. Their exports of urea was only like 262,000 ton versus 5+ million. So everybody's like, why is the price so high? One of your leading exporters cut it drastically. Well, this year, our January through October data hit 4 million ton. They still got 2 more months to go. So China feels like it's back. It feels like they're back to being comfortable. The Russia-Ukraine war still waging, of course, and we want that to be done, but these talks are kind of, hopefully getting better. The European nitrogen production outlook is improving with lower gas prices. So there's getting to be a subtle shift. What I'd love to see is more production coming online. And that's a big topic. That's something I really bang the table and say, North America, Canada, US, why are we not building more here where the demand is? But, so far that's fallen on deaf ears.
Obviously, you look at the now numbers wise, margins wise for these fertilizer companies, but is it just the long game? It's just a tough road to build something new, or there's other projects to focus on? Like, the demand is here. Like in Western Canada later this week, I expect that the StatsCan production report's going to say that we grew the largest crop in our history. Like that takes nutrients, that takes more fertilizer to pull that off again in the next year or the year after. So why not the investment?
Yeah. The first hurdle is the government. It's the regulation. It's the restrictions. Let's face it, both of our governments have been, we want green energy, we want clean energy. And listen, I'm all for it. I'm a big advocate. I want to leave the world in a better place for our kids than what we got it in. I'm not saying it was terrible when we got it. I'm always a big fan of improve things where you possibly can.
Sure.
Well, if we need this new production, I'd rather produce it here where we can control the environmental piece of it, where we can produce it cleaner than they would halfway around the world.
Yep.
But that's a hurdle because it's seen as, dirty energy. So let's say you get over that hurdle. Well, now you got to talk about money. Well, to build a brand new facility, you're probably talking $4 or $5 billion to build that thing. Yeah. And I don't have that sitting in the bank. I don't know a lot of people that do. And so then you got the money hurdle that you got to get over. Yeah, we've seen some help from the U.S. government that's been putting some dollars into it. I know there's been a couple looks up from the Canadian side kind of looking into it, but nothing near enough to help really push it across the line and be like, all right, yeah, we're going to build this. So even if you have the government regulations say, yes, you can go, even if you have the dollars to spend on it, well, now it's going to take several years. From the second you say, yes, I need the money, I've got it in hand, I'm going to build it, you're still talking all that construction time before the first ton goes out the door. Well, what does the market look like in, 1, 2, 3 years?
Yeah, fair enough. You got to definitely have your crystal ball long-term plan there. What about like in the prairies, we expanded our crush plants over the last couple of years. What about just a little expansion, just a little, hey, let's go and do a little work here and bump this up by 20%. Like, is that easier said than done?
It is easier said than done. The last time we saw that happen on a wide scale was back in 2012. A lot of the nitrogen producers across North America said the same thing. We're going to debottleneck our plants. We're going to expand our plants. It wasn't until 17, 18 that we finally started to see those new tons come onto the marketplace. So it is not a fast process. It takes a while. It's a lot of money to invest it. And honestly, I don't know this. I've never had anybody say this, but I'm just kind of looking at it from my own point of view. If I'm a manufacturer already in the space, why would I want to expand production? I like the margins that are where they are. The margins are where they are because supplies are tight. Why do I want to expand this thing, watered down for my entire complex? Like I said, I don't have that on any sort of accord. I've never had anybody say those words. But if I'm in that boat and I'm being very capitalistic and trying to eke out every dollar I can, more production means more supply, means lower margins. And I don't like lower margins. I like these big fat margins I've gotten used to over the last few years. Yeah.
And, if it's, I don't know, I'm sure there's an old saying I could try to pull from here, but, it just, if it's working well, like if it ain't broke, don't fix it. And, I wonder at times, when you're dealing at the farm level, when I'm chatting with farms, like the stress level of the decision, because what we get told is, and some of it, there's a bunch of truth to it, of course, but we get told like this summer it was, well, if you don't buy it, I'm phoning your neighbor and they're going to buy it, right? Because it's tight out there. Yeah. And then we're told, we can only ship this stuff at certain times of the year to a certain date, and then it's over. So if you delay your purchase, you're going to be stuck in the bottleneck. And there's truth to that. You can only move so much product per day, per week, per month. But I just wonder if it's a little bit elevated, keeps everyone a little bit on edge, and that helps on the margin side. But at the end of the day, everybody gets the product, and we put it in the ground, and away we go for the next year. Like, yeah, I don't know. It's interesting for sure.
I think there's some truth to it. I mean, again, let me say I go back to an old sales role, right? My big drive is try to push you, the buyer, to do something. And if you're comfortable and you feel like I've got all the time in the world, are you going to make a decision today? Or are you going to hold out? Are you going to wait? But if I can sit there and push you into an emotional state, I can get you nervous, I can get you scared, I can get you worried. Well, now you're off centered. Now you're uncomfortable. Now you're a lot higher chance to say, well, okay, yeah, let me go ahead and do that. It's not to sit there and say any of those reasons are wrong. In fact, a lot of them are right. One of the things I talk about a lot right now is, guys, spring is almost here. Everybody's like, dude, winter just started. What are you talking about? From a U.S. standpoint, half of our urea imports come from the Middle East. If you and I came together and said, dude, we're going to buy a vessel of urea, let's break it in. and the tons are at the port and we got a ship that's empty, it is still 30 days before that thing gets here. It is a 2026 baby showing up. And then we got to move it into the system. That's another 30 days. So now it shows up February 1. Winter feel real long to you at this point. It's just to sit there and show there is a lot of truth to the things that they say. And we did finally see a spring where UAN, you couldn't find it, but these are the exceptions, not the rules.
Yeah, for sure. So I'll give you a lay of the land here right now. And this isn't to pick on anybody in Western Canada. I think that everybody is, everybody's in farm business, and we all make decisions on any given day, and some are great and right, and some we wish we could take back. So I want to preface this because I'm not trying to pick on the retails out there, but this is the change in Western Canada right now, Josh. So in July, it was buy now. If you don't, the next guy is. And a few companies said, we're not taking on any new customers. Some retail folks said, we're not taking on any new customers, supplies tight. All right. Then we have a market peak in July. I think we have a market peak in like early September. And then from there, it's been just kind of steadily grinding lower. And in fact, there is no urgency. There's a few retails that have tried to put the 5 p.m. deadline on, only for the farmer to do a bit more research, get even lower quotes, and then that company say, never mind. Let's try again next week, right? But it's at that point now where there's no urgency. And in fact, some retails have just kind of stepped away. And so we don't want to talk about it with our farmers. We don't want to talk about it right now because they have their position on. It was put on earlier this year and they can't compete at these current levels. I haven't seen that for quite some time, Josh. Like, it's been a minute since I've seen that type of environment. Is this something? December's a big buy timeline for farmers with the calendar year end. Do you think that urgency on the farmer side should be there right now? Or is this a trend that could lead into late winter here?
So as I look at nitrogen, I think we could see this thing continue to slide for a little bit. I'm going to say a little bit over a few weeks. Maybe I'll be a little surprised. Maybe it lasts a little bit longer than that, but I think there's a floor out there. I think when I look at the market, I think exactly your point. I think most of the farmers across North America have seen this price decline and said, nope, this doesn't make any sense. Prices were insanely high. It doesn't make sense. I'm not making money. I am not going to lock myself into a deficit. I won't do it. And now I've been rewarded for it. So I'm going to sit back and wait. The problem is now you've got everybody waiting. And the stupid analogy I always use is it's like a dam. The dam is going to break. The longer we wait, the more that water builds. Well, the problem is you get rewarded, but all of a sudden, when that dam topples over, all that demand, all that water comes rushing over, and it's that much bigger. Now, are the dollars going to come year end? I'm really skeptical of it. I mean, frankly, you spend dollars at the end of the year to offset taxes. You pay taxes when you make money. Please show me farmers that made money this year. That's not a part of the equation. So I think that's a little bit of a weak link in the fertilizer market today. Folks that have never been a part of the retail, been on a farm, they don't understand that aspect of it. Year beginning. I think if you've been rewarded, what's the rush to buy year beginning? Where it could get interesting is some of the prices we're seeing slide. And I'm a big advocate for looking at the fertilizer price versus the crop price, looking at that value ratio there. We're finally getting down to a level that pseudo makes sense. It's back in the normal range. High end, but it's in the normal range. I think that's going to bring some demand. I know the U.S. government's talking about some subsidy payments to the U.S. farmer. That's going to bring a lot of demand because they're going to need to spend that money somewhere. And frankly speaking, there is a generational pull in every farmer's mind. When that calendar flips from 2025 to 2026, it's going to be like, crap, guys, spring's around the corner. I got to be ready to go because, maybe the fertilizer drops a little bit, but at the end of the day, if I don't get it on the ground, I can't raise a crop. I'm going under. I'm losing generations of work because I got cute with my fertilizer buying.
Yeah, for pardon me, Western Canadian farmers. So part of the financial side or the number side here is that they've taken their grain and locked it up in the bins, and so you can see it on the grain sales where the line companies, the elevators trying to pull wheat out of the bin. They're having to pay higher than posted prices because farmers have just put it away. But yeah, like where's the cash coming from then? If you're not moving grain, then where's the cash going to come from to buy some inputs? So it's really interesting. I've been on the show. I've been an active, I've been telling, asking farms to go and do a little bit of like wheeling and dealing and schmoozing. If nobody else wants to buy it right now, then maybe we should be the ones buying it. Maybe there's a willing partner out there. And I have a group of farms that have done just a great job of communicating and working those quotes down, and they did get to a spot where they ended up buying here the other day. But from where they started to where they finished, Phos went down, significantly. We got some help there, I believe, if you want to chat Phos in a second. Yeah, their urea kept working lower as well. So it's just maybe a time where, you can do a little wheeling and dealing. At least you feel a bit better that you accomplished something like at a lower price, right? Because it hasn't been like that the last number of years. So,
right.
Okay, what about Phos? Like, why did we see Phos drop, I think, 25, 30, 40 bucks a ton here in the prairies?
A lot of it has to do, again, we're going back to China. So China, historically speaking, is the world's largest exporter. They send out something between 8 and 10 million ton a year. The problem is, same exact problem. Russia invades Ukraine. The world thinks we're losing Russian exports. China starts clamping down on phosphate. And they continue to do so. Now, recently, I don't think it's because of the fear of a lack of global supplies. I think it's more from twofold. I think domestically, China, I think it's higher ag demand. I think that the government's gone to their farmers and said, grow more food. We don't want to buy this stuff from places like the U.S. and, okay, put more fertilizer on it. The other side of it is battery manufacturing. That's a big chunk that's all of a sudden come in. They're like, well, if we can put this phosphate into batteries and send out that very high finished good, that's a lot more money coming in. So do that rather than just send out the phosphate. So their exports have continued to be low. And in fact, 8 to 10 million is normal. Through October, their exports this year has only been 4.4 million ton. But that 4.4 million ton happened in July, August, September, October. So we've had a glut of Chinese exports come in, and we had India finally slow down their buying pace. That's allowed the world price to finally start falling. Unfortunately, that's one of those things. I think we're limited. I think now that we're getting into November, December, I think you're going to start getting those data. I think you're going to start seeing the Chinese exports slow way, way, way down. And you're going to start having Northern Hemisphere spring, not to mention Aussie demand popping up. So now you got a situation of supplies go back down. Now demand starts to rise back up. I'm afraid it sets a floor. I don't think we're going back to the highs that we were, but I think we're getting pretty darn close to what the bottom of this thing looks like, at least through the spring season.
You're bringing Australia into the mix there as well. And like from a crop production side, you look at the U.S. crop, I think maybe yields are down from where they peaked earlier this summer, but a big crop in the U.S., a big crop in Australia, a big crop in Canada, like that is a recipe for needing more stuff, more fertilizer put down the next year. Like you took more away in theory, so you got to put more down. So I think that's an interesting theme in 2026 here as well. All right, Josh, how you put this stuff out every day, every week, every month? How can people get a hold of you? How can they get in the know when it comes to the fertilizer markets?
So I try to be on Twitter every day of the week. I try to throw something out there, and when I come up blank, I try and put something out there stupid just to try and flood the attic. Because let's face it, it's easy to get depressed in these markets. But yeah, Twitter is a great play. And not just me, man. There's a lot of great information out there. You could dive in, find some good stuff. But my handle there, if you go type in @JLinvilleFert, you'll find me. You always go to StoneX.com. You can find us there. But we try and put out like a farmer newsletter.
Yeah,
it's a little more geared to North America, of course, but yeah, we do a weekly YouTube video. So I'll send out that link with a lot more commentary than what you're going to find elsewhere. And then I actually just sent out the December newsletter yesterday, and it's a deeper dive saying, here's all the things that happened. Here's the price movements. Here's what we think is going to happen. We talked about like urea prices coming off. We talked about that. I think it was last month, and saying, I think this thing's going to slide it. Phosphate surprised us, but we're not going to be right 100% of the time. But the same thing, you go Google StoneX Farmer Fertilizer newsletter, and it'll pop up. Should be the first thing.
Awesome. Sounds good. And appreciate that. One last one for you, Josh. A bit of a weird one, but as a crop marketing analyst type person, you normally have other crop analysts, like one or two people that you bounce ideas off of, and you check what they're doing, and you keep close tabs. Is there anybody in the fertilizer space where you're the guy, Josh, but is there anybody else where you look and say that person, maybe it's across the globe somewhere else in the US or Canada, you're like, that's the person that I like checking out their info or their stuff? Like, is there anybody stand out on that one?
Not as far as what they put out publicly. There's a couple gentlemen in the industry I think the absolute world of. I think they are geniuses, a heck of a lot smarter than I could ever hope to be. But the problem is they work for a private company, so they're not going to put that information out to the marketplace. But
yeah, fair.
I will say we try to do a good job of trying to keep to our own point of view of the marketplace. And this isn't because, we're so much smarter, we don't need to waste our time. That is absolutely not the case.
Mm-hmm.
The fertilizer market, with it being as small as it is globally, it is very easy to get caught up in the pack, get caught up in the emotion of it, and be like, well, everybody's saying it's bullish, we need to be bullish. Yeah. I don't want to run with the pack. I want to have a little bit of a different point of view. Like the urea thing, I'm going to say that only because it's one of the few things I actually got right. Everybody in the world was saying this thing's going higher and higher. I was like, I don't understand. Our prices today 20% higher than what they were same time last year, though our S&D is better today than it was last year.
Yeah,
this doesn't make any sense. So it's like, this doesn't make sense. It doesn't make sense. Or you're nuts. Yeah. All of a sudden prices are coming off. It's like, okay, this is why I tried to disconnect myself. It's not because I dislike people. It's not because I don't want to know their opinion. I just want to have a different one. If I start talking to everybody, it's very, very easy to sit there and go the easy road.
Bit of a small world, right? It's fertilizer, like it can be. So cool. All right, Josh. Well, we appreciate you jumping on the What the Futures podcast. Thanks for your time. I know you have a busy schedule, so I look forward to doing this again one day real soon.
Absolutely. Looking forward to it, man.